In May of 2020, FreightWaves Live is headed back to the largest freight market in the Southeast, Atlanta, Georgia. Join FreightWaves for our best event yet, featuring captivating keynote speakers and rapid-fire demos of technology that is sure to take our industry to the next level. This is your opportunity to interact with some of the most innovative leaders as we mark a new decade in transportation. See you in Atlanta May 5th and 6th.
Hello, and thank you so much for tuning in to this Tuesday edition of FreightWaves Now. I'm your host, Anthony Smith, and we have a full lineup for you today. Donny Gilbert making a return, talking to the brokers. We have Andrew Cox on deck, giving us the shipper update. But first, a word from Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Hey everyone, and welcome to your carrier update presented by PowerFleet. So the big question is, what's happening to the freight volumes in the United States of America in January, where they're going down versus December, there's no doubt. But how fast are they coming down? And we see here the outbound tender volume index compared to last year. Here in the pink here is last year's number, and we see that there's a bit of a turn up this time last year where we're not seeing this year, but we're still doing pretty well, about roughly 4% up year over year at this point in time. So where in the country are these volumes growing? So here behind me I have the outbound tender market share index on a tree map. And if anybody's been watching the FreightWaves Now videos over the last year or so, you'll know this is one of my favorite maps to look at in terms of growth trends. Like, how is the market changing year over year over time? So anything in red is showing a decreasing value year over year. Atlanta market, 9.2% down year over year. So it may be doing well in terms of last week or last month, but not necessarily in terms of year over year value. Harrisburg, Pennsylvania, a growth market. We saw those big, robust markets, robust growth, I should say, come out of the Northeast this Christmas and the holiday season. But and it's continued into January. So if you're a carrier and you're looking to see which market should I target right now in terms of year-over-year growth potential, et cetera, Harrisburg is looking good. Atlanta is looking not so good. Ontario, California, one of the biggest markets in the country right now, 15% down year-over-year. Now, we talked about the preference for shippers to go into the East Coast versus the West Coast, and a lot of the volumes have shifted to the East Coast right now. And again, we've got the AB5 issues going on out there. They're still in debate. A lot of carriers have already made their adjustments to the West Coast activity based on a lot of these situations that have already fully developed. So Ontario is a declining market right now. Houston, Dallas, both up year over year. So we're looking good in some of these bigger markets. Of course, LA is up 3.8%, but the bigger of the two markets is Ontario, so pay attention to that. Columbus, not looking so great. Chicago, 9.7% down year over year, a huge hub in the United States for freight movement. So let's check out and see what's going on in the rest of the country today in terms of capacity. So the weighted rejection index, in color here, the blues indicate a tightening capacity, whereas the reds indicate a declining capacity. So it should be a loosening capacity, I should say. So here in the middle of the country around Kansas and Omaha, Nebraska, looking a little bit tighter today. Not a huge market though. Some of the bigger markets in the country right now, like we mentioned with Columbus, Atlanta, all the bigger markets out here are showing dark red. So that means that you need to be aggressive in these markets, especially if you've got trucks going into these areas today. Make sure that you are aggressive on your rate, maybe take not as much as you would normally take on the margin side. But here, up here in the Midwest, the upper Midwest is really a market that I wanted to focus on. Minneapolis has been a big point of contention over the last month or so in terms of tightening capacity. Some of the highest rates in the country have come out of Minnesota in the last little bit. So tender rejection rates are moving up. You know, after declining a little bit after the holiday, they are starting to show up. Now, reefer rejections here in green, really pulling the weight in this market over the last day or so. So if you are a reefer carrier in the Minneapolis market, you definitely need to charge for that. Anything coming out of that market today, especially on the spot side, you will have a lot more opportunity in that region. So How long will this continue? We don't know, but it is a colder time of year. Minneapolis is very subject to weather conditions and problems of that nature, so be safe when you are going in there. So thank you for tuning in today's Carrier Update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Thank you, Zach, for that wonderful update there. Today we're going to focus on, with the brokerage, we're going to focus on outbound tender rejection rate and what's currently going on in the markets. What I specifically want to talk about is, what if you're using a rating tool right now? What are the changes that have currently gone on in a market? Here behind me, I brought our outbound tender rejection rates, and I brought a rating tool that here we want to show you how the rating tool currently is about 7 to 10 days behind. So here it's putting out a rate per mile right now for the average on the US of $1.61 a mile, but that is back all the way at December 28th. And here, if you're looking at our outbound tender rejection rates, we've seen the market dive down since then over the past 10 days. So using a rating tool currently being 7 to 10 days behind, that's really going to lead to you overbidding your freight right now. So you really need to dive in and look at these outbound tender rejection rates per market, because you might need to adjust your rates and bring them down a little bit. If you're overbidding your freight, you're not going to be winning the freight. And you have to win freight these days, of course, to make the money. Looking at a tree map, I want to show you here over the past week to week change, we see a lot of red right now, and this is where the tender rejection rates have fallen off in every market. Of the 135 markets, you do have about 10 or 12 markets that do show in green, and these are markets that are actually growing. So here, these are the diamonds in the rough. So as we look through, these are the markets that you want to look into and find. You got Omaha, Nebraska has a 4% growth week to week. You got St. Cloud, Minnesota, 14.8% growth. And of course, Duluth, Minnesota, right there near the Minneapolis market, at a 37% increase. So as you look across these maps here, these are the markets that you might want to seek out that show growth right now, where all the other markets are in decline. The one I want to jump into today, Omaha, Nebraska. And specifically here, why I chose Omaha is they're still running a 20.40% outbound tender rejection rate for their dry van. We saw them drop down here starting right before Christmas. This market started to drop off. And here in the past few days, their outbound tender volumes have actually started to pick up, and their inbound tender volumes actually kind of started to, kind of remain flat and dive down just a little bit. And in return, we saw where outbound tender rejection rates for dry vans started to pick up in this market. And a 20% tender rejection rate, that's a very high tender rejection rate for this market. So it's kind of telling us that the spot market rates for this are well above the contract rates in this market. Also in this market, the reefer. Reefer here, we see the same scenario. It's jumping up. It's to 33.50%. Again, we saw it kind of start to fall down here just before Christmas. And right here in the past couple of days, it picked back up to 33%, well above our market rates. That's what I have here for you today. Thank you for watching.
Voices from every corner of the supply chain concerning all modes of transportation. From the world's largest logistics podcast network, this is what the Freight Tech Revolution sounds like. Freightcast presented by FreightWaves. Subscribe now wherever you get your podcasts.
I'm here with Andrew Cox for a shipper update. Andrew, what do you have for us today?
Anthony, today we're talking the Institute of Supply Management's PMI, the Industrial Manufacturing Index. So this is an index that has equilibrium at 50, so anything below 50 will be a contraction, and anything above 50 will be an expansion. And we've now been below 50. We don't have the newest number. The newest number even slid a little bit further down to 47.2. We've actually been contracting for 5 straight months now, and the 47.2 is the lowest number that we've seen since we exited the Great Recession in 2009.
Right. So looking at the PMI from ISM, yep. As you mentioned, it has that 50 threshold, and the latest number showing that 47.2, I believe. So I guess the big takeaway is it's not a good outlook or condition for the manufacturing and the industrial sector.
Yeah, correct. Currently, we are looking at a contraction, and we have for the last couple months, but it has had a little bit of, it has a sorry about that. We have a 6-month outlook within that PMI, and those are looking rosier.
Okay.
I think a lot of these executives that this index is taken off of, they're looking towards that phase 1 trade deal with China to give a little uplift to the industrial and the manufacturing sectors, looking into the second half of 2020.
Right.
And this is kind of a tale of two economies, right? So if you want to look at the PMI over the last few years, you can see, like I said, this was the lowest number since we came out of the Great Recession in 2009. But we do think that this will be troughing here soon.
Okay.
So that we look to 2020 to be a better year for the industrial and manufacturing sectors. And like I was saying a second ago, that that's a tale of two economies. We have a troughing industrial sector, but we have a retail sector that may have peaked.
Got you. And so when we're looking at the PMI, as you mentioned, a lot of negative activity in the last few months. This is going to have an impact on freight, right? So when we're looking at this, there's going to be a lot fewer opportunities coming from the manufacturing segment, and it sounds like retail and consumer-facing areas are going to offer more opportunities for transportation. Is that right?
Definitely, I'd agree with that. I think flatbed, we've had a slower flatbed year into 2019. Maybe it picks up a bit in 2020. And the van, we had a slow summer, a slow beginning of the year, but we picked up in the second half of 2019 there towards the end of the year. I think that we have a little bit of a slower first quarter, but moving into the second half of 2019, I think we have a little bit of a slower retail and consumer economy, but a picking up of the industrial economy. So we have a converging growth between the two that leads to slower growth in 2020, but growth nonetheless.
Right. And I think one of the things that really pointed to some of the contraction in the PMI that we're seeing right now was that there's components to it, right? So there's new orders, backlogs, all that stuff, and that was showing some signs earlier on in the year. And so when you're mentioning some of the things that's on the consumer side, the retail side, you sound pretty confident, so I'm guessing there's some strong underpinnings, right, supporting the consumer?
There is. So if you look at any of the consumer confidence metrics, you can do the Conference Board or the University of Michigan. Both are near all-time highs. The Conference Board was over like 130, and it peaked in the middle of the summer, but it's still higher in the end of 2019 than it was in the beginning of 2019. So, and we have a really strong labor market, one of the strongest in decades. We have a really confident and happy consumer with wages in their pocket, and they're spending a lot of money. It's not always on these big purchases, which is one of the reasons that industrials and manufacturing has been slowing. If you look at automobile growth, for example, we had a really slow December, but consumers are still spending money. Retail growth, I think, was up, well, not there, but retail sales was up 3%, 3.5% year over year this past month. So either way, the consumer is confident.
Excellent. So it sounds like consumers confident. That also means consumer-facing industries are going to be profitable as well. Especially in one of the things that we talked about earlier was yesterday was talking about housing and things like that. And so that might be a little bit of relief for flatbed trailers that typically haul manufactured goods and also building supply materials. Maybe they can find some relief coming from the construction side as well.
Yeah, certainly. New housing starts look to be a decent year in 2020. Debt isn't too bad, and neither is credit. So, yeah, I think some of the flatbed carriers can look for some easing off of their balance, off of their books, to get some wood and lumber and move towards construction.
Awesome. So it sounds like we have a lot to look forward to in the second half of 2020. Thank you so much, Andrew, for those insights. And thank you so much for tuning in for this Tuesday edition of FreightWaves Now. The content doesn't stop here. We're always posting around the clock. So be sure to check us out on all your favorite social media platforms. And we just launched our FreightWaves TV app. So check us out on all your favorite streaming platforms as well, including Apple TV. We'll see you on the next episode. Thanks so much for tuning in.
FreightWaves continues to follow the incredibly sad story of Indianapolis-based carrier Celadon Group abruptly shutting its doors, leaving 4,000 people without jobs weeks before Christmas. We here at FreightWaves want to help. FreightWaves has established a free job board for companies to post their openings and for people looking for employment in the freight industry to share their resumes. There's no cost for anyone to participate. Hundreds of jobs have already been added to the site since it went live on Monday. If you're looking for employment or have a job to post, head to freightwaves.careers.